So joining us now from London is Matthew Knight. He is a digital strategist and blogger. Thanks very much for being with us. How does the speculative nature of what we're seeing with Bitcoin and its price surge compare with previous bubbles?
Well, I think the difference is technology. This is not just about people who have access to trading floors and markets and auctions. It's very easy for anybody to install an application, a wallet on their phone, and just put £1 or £2 in. And I think that's what is driving a large portion of its growth. It's not too dissimilar to a lottery where you go, well, you know, I'm going to lose £1, worst case scenario, I don't get anything back from the lottery. But the benefits here, you see that pound grow to £2, £3. You know, if you'd have had money in there over 12 months ago, you'd have seen a significant return on that investment. And that compels you to say, well, maybe we put a little bit more in and continue to see that investment grow. The risk is, of course, that if there's a sudden run on those markets and people start to extract that Bitcoin and convert it back into currency, there isn't necessarily the security there to protect those investments. So where's that money going to be coming from? The reality is you can't really buy anything with Bitcoin at the moment. You have to generally convert it into another currency. There are obviously plenty of stories around dark markets and the ransomware attacks that we saw a couple of months ago being exchanged in Bitcoin and cryptocurrencies. But the reality is that the value is purely speculative. And I think when that bubble bursts, we can see a lot of people losing a significant amount of investment. I guess the difference is that you'd had a tulip bulb in the previous example, but now it's literally a virtual currency. And that's, I think, personally, another reason why I think this is such a growth curve that we're seeing. It's just a number on a screen. It's relatively easy to see it on one bank balance having a $10 amount and then seeing it transferred to another screen. It's a little bit like playing with Monopoly money.
So what do you think drives the psychology of investors when they look at Bitcoin?
I think there is a desire to see a huge return on investment, and they are seeing that, and there's a confirmation bias in effect there. They're seeing that growth, but I think what is fueling a large amount of the market is those investors who don't necessarily have the heritage, who know how to read the markets, who know how to balance that risk. And it seems like a relatively easy investment with high rewards. The reality is that the markets just aren't normalizing. We don't know where this is going to go. The larger organizations, the hedge funds, even governments, the Japanese government seem relatively supportive of cryptocurrency, whereas China is fairly anti it. They're looking at the larger market, not just Bitcoin, but cryptocurrency at large. There's a big difference between the blockchain, the actual technology, and the cryptography which sits behind this that enables these transfer of value exchange. And I think that's not going to go away. But Bitcoin itself, it does seem to be something which is extremely volatile, but it's very easy when you're seeing large numbers being reported in the press day on day about these huge dramatic growths. We saw a $1,000 increase in value in just the case of, it was kind of 12, 24 hours. So that's very easy to just jump on and go, well, I'll have a little bit of that and see your value increase. I think the biggest challenge is it's very easy to buy portions of Bitcoin, but it's relatively hard to get that money back out of the system again.
And what's distinctive about Bitcoin as well is that it's an unregulated currency, largely. No one owns the Bitcoin network. It's not tied to any government or country. Does that add to the uncertainty about its future, or is that in fact what makes it attractive to many investors?
Yes to both questions. It certainly drives its uncertainty. I mean, Bitcoin itself has recently forked into two different versions of its own currency because of a disagreement within the developer community of who actually creates this software that allows it to exist. So yeah, there is a huge amount of volatility from the software itself, the way that the market works, from investors, from people taking money out of that system. But as you mentioned, it's deregulated, it's decentralized. I think as far as cryptocurrency is concerned, and certainly the blockchain, we are set to see that only increase in its strength and its use across private markets, potentially nations looking at how they can use cryptocurrency and the blockchain to create more secure and authentic transactions, especially across borders. That's one of the most powerful things around cryptocurrencies, is that the transfer across borders is so much easier than with currency. So it has complete validity in terms of a transfer mechanism, but there's just not enough of a secure growth and understanding of how the patterns work yet for any kind of significant investors to say this is something which we want to put as a long-term investment. It's just too risky and has many similarities to day trading at the moment.
Good to speak with you, Matthew Knight, joining us from London. Thank you.
Thank you.
Well.